Have you ever felt like saving money is an uphill battle that gets you nowhere? What if I told you there's a secret tipping point that transforms your efforts into exponential growth? In today's video, we'll uncover why hitting $100,000 isn't just a milestone. It's the moment where your money starts growing faster than you do, thanks to the power of compound interest. We'll break down exactly how this shift happens and reveal the three levers: offense, defense, and efficiency that can get you there faster. By the end, you'll know exactly how to flip the switch from slow saves to exponential growth. But before you can reach that tipping point, it's important to understand why the early stages of building wealth feel so slow and why that's completely normal. For most people starting out, building wealth feels less like making progress and more like treading water. You put in the hours, cut back on spending, and stash away every dollar you can. But when you check your balance, the numbers barely budge. That sense of slow motion isn't just in your head, it's a real, universal part of the process. Let's break it down. In the beginning, saving your first $10,000 can take years of hard choices and daily discipline. Every dollar you put away feels hard-won, and the sacrifices, skipping dinners out, saying no to new gadgets, delaying vacations, add up. But even after all that, the payoff seems small. Imagine you finally hit $10,000 and invest it at a solid 10% annual return. That's $1,000 a year. Nice, but hardly life-altering. It can feel like you're putting in maximum effort for minimum reward. This slow pace is mostly because your starting balance is so small. When you're just getting started, the growth of your money depends almost entirely on your own contributions. The magic of compounding, the thing you always hear about in personal finance, hasn't kicked in yet. If your investments are only generating a few hundred or even $1,000 a year, it's easy to feel like you're not getting anywhere, no matter how disciplined you are. Think of it like pushing a small, heavy snowball up a steep hill. Every inch takes serious effort, and the snowball barely grows. It's easy to lose motivation when the results are so subtle. But here's the key. This early grind is actually setting the stage for everything that comes next. Every dollar you save, every habit you build, and every system you put in place now is a crucial building block for the future. Studies show that consistent contributors often don't see clear compound growth until several years into saving. It's not a sign you're doing something wrong. It's just the way the math works at the start. This phase is about more than just the numbers. It's also about shaping your mindset and routines. You learn to track spending, stick to a budget, and make thoughtful choices with your money. These habits might seem small, but over time, they become second nature and make a huge difference in your long-term results. Morningstar found that investors who start small but consistently contribute, even when the market is unpredictable, are far more likely to reach major milestones later on. Their success comes not just from the returns themselves, but from the discipline and systems they develop during this slow, effort-driven phase. It's important to recognize that this early stage isn't wasted time. It's the price of admission to the wealth-building journey. The frustration you feel now is actually proof that you're laying a solid foundation. As you keep saving and investing, the snowball gets a little bigger and a little easier to push. Eventually, you reach a point where your effort and your result start to align. The returns become more noticeable, and you finally feel like your money is starting to work for you. The shift doesn't happen overnight, but it does happen. The anticipation of that tipping point is what keeps many people going through the grind. Once you hit it, the experience of building wealth changes completely. The numbers start to move faster, and the momentum you've been waiting for finally arrives. So what exactly is that tipping point where everything changes? There's a specific milestone where the math begins to work in your favor, and all your early effort starts to pay off in a big way. Let's look at why that number matters so much and how reaching it can transform your entire wealth-building journey. The $100,000 tipping point isn't just another round number. It's the place where your financial momentum shifts in a meaningful way. Up to this stage, every bit of progress depends mostly on your own effort, working, saving, and making tough choices. But once you reach six figures in your investments or savings, something changes. The math starts to work in your favor, and compound interest finally stops being an abstract idea and becomes a real force in your financial life. Let's look at the difference this makes. Take two portfolios, one with $10,000, the other with $100,000. If both earn a 10% return, the smaller account grows by $1,000 in a year. That's helpful, but it won't move the needle on your lifestyle. The $100,000 account, though, adds $10,000 in the same year, without any extra effort from you. That extra $10,000 isn't just numbers. It can fund an entire month of living expenses without touching your principal. The only difference is the size of your starting balance. This is when compounding begins to feel real and your money starts to take on a life of its own. Why does this leap happen? It's all about scale. Early on, your progress is tied almost entirely to how much you can save. Most of your growth comes from your own contributions, and every dollar requires discipline. But as your principal grows, each percentage gain produces bigger and bigger results. Your returns don't just increase. They build on top of previous returns, creating a snowball effect. Instead of pushing that snowball uphill, you finally reach the top, and gravity starts to help. The effort you put in earlier now pays off with momentum you can actually see in your account statements. This isn't just a nice theory. Research shows that reaching your first $100,000 can take 7 or 8 years for many people. But the second $100,000? That often takes about 5 years. And the third can come in under 4. The acceleration isn't because you're working twice as hard or living on half as much. It's because the money you've already saved is now working for you, compounding on itself and picking up speed. This shift brings more than just bigger numbers. It delivers a sense of freedom. When your investments generate $10,000 in a year, you gain options. You could take a month off work, cover a large unexpected bill, or simply enjoy the peace of mind that comes from knowing your money is working in the background. You're no longer trading every hour for every dollar. Your dollars are doing some of the heavy lifting, and that changes how you approach your finances. There's also a real psychological impact. Once you see your portfolio growing on its own, the sacrifices you made early on start to feel worth it. Instead of focusing only on cutting costs or chasing every extra dollar, you begin to think differently. You look for ways to make your money work smarter, not just harder. You become more interested in long-term growth than in short-term spending. Watching your returns snowball encourages you to stay disciplined and keep optimizing your strategy. At the $100,000 mark, the process of building wealth starts to feel less like a grind and more like a system that can run on its own. The habits and systems you built in the early days now fuel faster progress, and the journey feels more manageable. You're no longer just a saver, you're someone whose money is actively working, opening up new possibilities for your future. But getting to this tipping point isn't only about patience. It's also about using strategies that help you build momentum more quickly and effectively. Understanding which levers to pull, whether it's increasing your income, cutting expenses, or making your money more efficient, can make all the difference in how fast you reach that first $100,000 and how much easier the journey becomes from there. To move from slow progress to real momentum, you need to understand and use the 3 levers of wealth: offense, defense, and efficiency. These aren't just buzzwords. They're the practical controls that shape how quickly you can build your financial base. Each lever has its own role, and when you use them together, you create a system that accelerates your journey towards that first $100,000 and beyond. Offense is the starting point. This lever is all about increasing your income, and it's often the most powerful because it gives you more fuel to work with. If you're not bringing in enough money, saving and investing meaningfully becomes much harder. The more you earn, the more you can set aside, and that makes a real difference over time. There are several ways to boost your income, and the best approach is the one that fits your skills and your schedule. Asking for a raise is one of the simplest and most overlooked strategies. Many employers expect these conversations, but few people actually initiate them. If moving up at your current job isn't an option, consider freelance work or a side hustle. Skills like coding, writing, editing, or tutoring can all be sold in the gig economy. Even small wins, like picking up a few $100s each month from a side job or negotiating a better salary, add up over time and can significantly shorten the path to your first major financial milestone. Defense is the second lever, and it's just as important. This is about protecting your income by making sure you spend less than you earn. It's easy to fall into the trap of lifestyle inflation. When you get a raise, it's tempting to upgrade your car, move to a bigger apartment, or start spending more on small luxuries. But if your expenses rise as quickly as your income, you won't actually make progress. The key is to be intentional with your spending. For example, opting for a used car instead of a new one, brewing coffee at home instead of buying lattes, and cooking at home more often are all ways to keep your expenses in check. These choices might seem minor, but they free up thousands of dollars over time that can be redirected towards saving and investing. Defense is about making sure the money you earn actually stays with you and works for you, rather than slipping away through unconscious spending. The third lever is efficiency. This is where you make your money work smarter, not just harder. The first step is to take advantage of tax-advantaged accounts like 401ks, Roth IRAs, and HSAs. These accounts shelter your investments from taxes, allowing your money to compound faster. Every dollar you keep away from taxes is a dollar that continues to grow year after year. Another simple but powerful move is to make sure your idle cash isn't sitting in a checking account earning 0.01%. Instead, park it in a high-yield savings account that pays 4% or more. That alone can mean hundreds of extra dollars in interest each year with zero extra effort on your part. Automation is another piece of the efficiency puzzle. By setting up automatic transfers to your investment or savings account right after payday, you ensure that you're consistently saving and investing without having to think about it each month. This removes the temptation to spend before you save and helps you stick to your plan, letting compounding work in your favor over time. Fees are another area where efficiency can make a big difference. High fees can quietly erode your investment returns, so it's smart to stick with low-cost index funds rather than pricier, actively managed funds. Research shows that index funds tend to outperform most active managers in the long run, and the lower fees mean you keep more of your gains. What makes these three levers so powerful is how they work together. You can earn more, but if you don't control your spending, you won't keep much of it. You can save diligently, but if you're not investing efficiently, you're leaving growth on the table. When you combine offense, defense, and efficiency, your progress multiplies. For example, someone saving $10,000 per year with a 7% return can reach $100,000 in about 8 years. Increase your savings to $15,000 per year, and you can get there in just over 5 years. Every improvement compounds, and the effect is dramatic. Mastering these levers doesn't just change your bank account, it changes your entire approach to money. As you build momentum and see your efforts pay off, you start to think differently about wealth and what's possible. This shift in mindset is just as important as the math, and it's what truly sets successful wealth builders apart. After you cross the $100,000 mark, your entire approach to money begins to shift. This isn't just about seeing a bigger number in your account. It's about changing how you think, plan, and act with your finances. This stage is where thinking like a wealth builder truly starts, and it's a turning point that can shape your progress for years to come. Before reaching 6 figures, most of your focus is on earning more and saving as much as possible. You might be working overtime, picking up side hustles, or tracking every expense. The progress feels slow because most of your growth comes from your own effort. But after $100,000, the momentum starts to build on its own. Now your dollars act like a team of workers, each generating returns and multiplying quietly in the background. Compound interest, which once felt theoretical, starts to make a noticeable difference in your net worth. Let's put this in perspective. With $100,000 invested at an 8% annual return, you're looking at about $8,000 a year in gains, roughly $670 each month. That's a meaningful boost, and it happens whether you're working, sleeping, or taking time off. By contrast, with $10,000 invested at the same rate, you'd see just $800 a year, or about $67 per month. The difference is clear. At $100,000, your money finally starts working for you in a way you can actually feel. This shift isn't just about the numbers. It's a psychological transition that changes your priorities and your approach. Instead of obsessing over every small purchase, you start focusing on bigger decisions that move the needle. For example, you might weigh the opportunity cost of a major purchase, like choosing between buying a new car or investing that money for future growth. The awareness of what your money could become in the long run makes you more thoughtful about where every dollar goes. At this stage, you also begin to value systems over constant effort. By now, most successful savers have set up habits like automating contributions, investing in low-cost index funds, and using tax-advantaged accounts. Investors who automate into diversified portfolios often free up mental energy to focus on higher earning opportunities or personal growth, rather than micromanaging every financial move. This creates a sustainable approach that doesn't rely on willpower alone. Long-term thinking becomes second nature. Instead of chasing quick wins or getting distracted by short-term rewards, you start to see how patience and consistency pay off. You recognize that every dollar you invest today can double or even triple over the next decade. So you become more selective about your spending and more committed to your plan. This perspective helps you avoid lifestyle inflation and keeps you focused on scalable investments like stocks, real estate, or businesses that can multiply over time. Researchers found that crossing $100,000 reinforces your belief that you can manage money effectively. The sense of accomplishment that comes with this milestone isn't just a confidence boost, it opens the door to taking calculated risks and exploring new opportunities, whether that's investing in a rental property, starting a small business, or branching out into new asset classes. The more your money grows, the more you trust your ability to make smart decisions and adapt to new challenges. Thinking like a wealth builder means putting systems in place, trusting processes, and letting your money compound without constant intervention. It's about shifting from the mindset of a saver, someone who relies on personal effort, to that of a strategist who leverages automation, smart choices, and time to build lasting wealth. This shift from saver to strategist is what powers your path to real financial freedom, setting the stage for everything that comes next. As you move forward, remember that reaching $100,000 is where the math, momentum, and mindset all come together to change your financial landscape. Each dollar you save acts as a silent worker, quietly compounding and building your future behind the scenes. The habits you've built, consistent saving, investing wisely, and using the right systems are what keep this momentum going. Tell us in the comments, what's your biggest hurdle on the way to your first $100,000? Let's help each other break through. Every dollar you save today is a silent worker, so start planting seeds now and watch your wealth skyrocket after your first 6 figures.